there is so much negative news around, and the market has already crashed almost close to around 10% from the top. Are you getting scared to invest at this time, or are you considering maybe I will wait for some more time before I go and invest? If you are this person, then I would like to show you some facts which will actually blow your mind, and I am going to show you in this video why it is the right time to start investing today. So market right now is giving you a very good opportunity based on historical facts, and this can be used by you today to actually enhance your returns. Before moving on, I would also like to tell you about Quick Alpha. So I have attached the link in the description below. You can just go to quickalpha.in and check out our market related services. Also, you can open a free first stock account using the link in the description and get 2000 rupees worth free brokerage credits. So with this, when you take a look at the market more or less peaked out during the first week of October when SEBI came out with the new rules for F&O. From then on, FIIs have already sold close to around 1,50,000 crores just in 1.5 months, and this is the highest selling that they have ever done in previous 45-day time span. So the selling has been very aggressive, and if you see, the small cap, mid cap and most of the sectorial indices are already down more than 10%, and Nifty also today ended up hitting a drawdown of totally around 10%. So overall, currently the sentiment is quite bearish because people have already started to wait before they want to invest. So a couple of months back, if you actually take a look at it, whenever there was a dip, people used to rush and buy stocks. Now they're telling, let me wait for some more time. There is a news coming in that retail inflation is peaking, and on the other hand rupee is weakening. So there is so many bad news suddenly started to flow. All these were there quite some time back, but today they are standing out because the market is falling. If the market was going up, nobody really bothered about all this news. So now the question is, why am I saying it is a good time to start investing now rather than waiting for some more crash? So what if the market actually comes down by 15% or 20%? The chances are definitely there. So why not wait? Why not look for the market to show some sign of recovery before you invest? So it often ends up happening that people who actually wait to invest usually miss out on the entire rally because they just keep waiting. So after some point of time, what tends to happen is the market will go up and they feel that the market was available at a much lower rate. Why should they pay a premium today? And this way they generally end up missing out the whole rally. There is obviously no way that anybody can predict the bottom of the market. So you have less than 0.01% chance of actually predicting the market bottom. So given this, now let's see some interesting facts and figures to see why it is worth investing today. For this, I have just opened an Excel sheet which I have created right over here, and this is going to show us what if you actually end up investing every time the market corrects 10%, and what if you end up investing every time the market corrects by 20%, right? So you can see that overall from the period of 2004, right, so that is almost close to 20 years back, right? So we have taken the data of 20 years, and in 20 years totally you have got around 13 opportunities where you could have invested when the market fell more than 10%. So in this 20 years there were 13 periods where the market actually ended up correcting more than 10%. So without thinking whether it is a good time or not, if you had simply invested, right, so just whenever it hits 10%, just simply end up investing, don't have to bother about anything much. You can see that out of this 13 times, there were only 3 times where you actually ended up making a loss if you had held for 1 year. So today we have hit 10% drawdown. So if you are holding for one more year, that is November 13th of 2025. So out of the last 13 times, there was only 3 times where you have actually ended up with a loss, which means remaining 10 times out of this, you have actually ended up making a profit. So how much profit have you made? Let us just find out. So when you actually take the average of the returns, you find out on an average, you have made a total gain of 17.97%. So if you actually end up investing in the market every time it corrects 10%, so you have close to around 76% chance that you will end up making 17% return. So this in itself is a very good probability, because 10 out of 13 gives you around 76 to 77% chance of making a profit, and you have made an average of 17% just in 1 year. So that is the average return what we have seen. So now when we take a look at the same data for 20%, so you can see that totally there were only 5 periods where Nifty has corrected a total of 20%. So you can see the amount of opportunities, right? So there was 13 times when Nifty had actually fallen 10%, but only 5 times when it has fallen 20%, which means automatically the opportunity to invest reduces by 60%. So whenever it hits 10%, if you start waiting for a 20% correction, most likely you will not get it at all, because only 5 out of 13 times, which means it has hit 10% totally 13 times, but it has reached 20% only 5 times, right? So the probability is very minimal that a 10% correction can actually lead to a 20% correction. So in spite of investing after 20%, you can see that still there was one period out of those 5 where after holding for 1 year also you weren't able to end in a profit. So which means out of totally 5 times you ended 4 times in profit and 1 time in loss, which happens to show that there is a 80% chance whenever you invest after a 20% correction, so you will actually end up making a profit. And what is the average gain you have made over the period? So let us just find out that. So you do see that you would have made an average gain of just around 17% holding it for 1 full year after you invest at a 20% correction. So you can see what exactly is happening here. So whether you invest at a 10% correction or 20% correction, you are more or less getting the same average return, that is 70%. Your probability of making a profit is also around 75 to 80%. So there is absolutely no difference. So whether you are investing at 20% correction, 1 year later your average return is just 17%. Similar is going at a 10% correction. The difference is coming because you have more opportunity to invest at a 10% correction rather than waiting for 20% correction. So the market which has corrected 10% might not always go and correct 20%. So there is only a 37% chance that the market which actually has corrected 10% can go on to correct 20%. So which means you have a fairly good probability or something as equal as investing in the market when it corrects 20%, and also almost a similar kind of average return. So whether you have invested at 10% down move or 20% down move, so a similar kind of average return. So this goes on to show, instead of actually listening and getting influenced by the news outside, so the market is falling because of such kind of a sentiment, and the first thing you have to do is just ignore all of this and actually go and invest. So you have a fairly high probability that within 1 year your investment is actually going to turn profitable, and the average return what you are going to get is also quite high. So without further missing out on this opportunity where you have got a 10% correction, so I am pretty sure most of you would have thought when the markets were going up, whenever it corrects 10%, I will be the first one to invest. And I am pretty sure these are the same people who are holding back today. So they are not ready to invest, they are waiting for a further fall. So based on the data, what I would definitely suggest you to do is start your investments today. So whoever was waiting for a crash, you have got a best opportunity. Statistically also you stand to win by starting to invest today. So I hope this simple comparison might have cleared out a lot of things which is in your mind. Should you wait for more correction? Should you wait for more fall? Or should you start investing today? Right? So this data I'll again be putting down in the description, which you can go and download and do the analysis of your own. So you can also see in this particular period, it also shows when exactly the 10% drawdown came, and from that day to next 1 year, what exactly has been the return. So the entry date and the exit date, also it shows the price of entry and exit price. So everything is given in this sheet, so please do check it out. So approximately every 2 year once you get a 10% correction, and approximately every 4 year once you get a 20% correction. So this is an approximate number. Previously we had got correction in 2022 where Nifty had fallen around 15%, right? So currently it's 24, where again it has come down by 10%. So let's see how we can make the best use of it. Always remember, market is going down because of the negative sentiment, right? So the negative sentiment is created by lot of negative news coming around, right? So if everything was positive, market wouldn't have gone down. So it will only go down because of the reason, and the reason is this. So please mute yourself from the outside noise and just focus on the statistics and make your investment today. I hope this video was informative and this will bring some insight into your investing journey. If you have liked this video, make sure to hit the like button, share this video and subscribe to my channel. Thank you so much.